The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the show. I'm your host, Darrell Martin, here at TFNN on the Diagnostic Trading Hour, and appreciate you for tuning in. If you ever got any questions, feel free to give me a call live here, right here on the show. You can call me about stocks, options, futures, forex, binaries, spreads, oh my, right? So bring them all in. We got 877-927-6648, and that's 877-927-6648. For those of y'all listening on the web outside of the U.S., you can check us out at 727-445-1044. Again, you can call in at 727-445-1044. And what do we got going on today? Right now, we got the S&P sort of range bound at the moment. It's down a few points. We got the NASDAQ down 6. We have the Russell down a little over 2 points, and we have the Dow down 19. Gold is down up about $6 on the day, $5.50 right now. We got silver up over 1% on the day. Silver is moving and a shaking. We got copper. It is down about 1/3% with oil down to 88 cents. So nice solid move on oil. Looking on over at corn, it's down 50 cents. We got soybeans is up. Let's see here. Is that soybeans? Yeah, wow. Soybeans up 18.75. So a solid 1%, over a 1% move on soybeans. Euro dollar down 31 pips. That's a quiet day for the euro dollar lately. We got pound dollar up 74. We got Aussie dollar up 63. Euro yen is up $1.49 with down $1.49. Pound yen down 81 cents. US yen down 90 cents. US Canadian down 11, and US franc is up 20. So right now, overall, we're seeing some mixed results. I mean, we're seeing some stronger dollar, some weaker dollars, depending upon the pair. And the market, has been oscillating most of the morning. And let's see, what do we have? We had a lot of news trades come out in the last 24 hours here. So let's check them out. Let's talk about them. Let's look at them and see what we had. All right, so pulling them on up. We started off this morning. Let's go on in and look at the euro dollar over here. We'll be able to see that. So on the euro dollar, early in the AM, you would have had the German flash manufacturing PMI. The French one does come out at 4 o'clock as well. So you could trade either one of them. The French or the German. Sometimes I hop in before the German one. Sometimes I hop in before the French one. The only disadvantage on the French one is you're going to have to take an earlier spread, like a 5 a.m. spread. So that may or may not be a disadvantage depending upon how the market's moving that day. But as you can see, the big movements on the 4:30, and we didn't get a whole lot, really. I mean, there's some up and down movement right there on the 4 o'clock one. Didn't get just a solid move on the 4 o'clock. But right there at 4:20, hopping in, that's where the big move happens. So usually, as long as I can find a solid spread, I like to look at the 4:30, because then I can get the 6 o'clock expiration or the 7 o'clock expiration. Of course, you can get on either one. But looking at that, you can see it moved down. It went down to the 0.5, went on down to 0.7, and get rid of that off the screen there. And you notice how it hit 0.7 deviation perfectly before bouncing back. And if we were using our trailing stop method, you could also have used that. And so don't want to forget about that. It's very, very helpful. And let me show you. Again, I go over this every day because I know we have a lot of subscribers that are looking at those deviation levels. And I want to make sure that you do understand how to properly use them to help you manage your profits. And whether you're trading Nadex, forex, or futures, you can use these deviations to help you manage your profits. So let me throw a little toolbar over here, and that'll help me out on doing some drawings for you. And what we got is go on in here, and you can see what we're looking for is the bar that closes below a deviation. So if you were actually trading directionally, now if you're on the news, should be going for 1-to-1, get out. I use Nadex spreads. Now, I don't use the news in the traditional sense of the fundamentals to tell me what's going to happen and go, okay, well, the news did this, so eventually I should see this, and therefore I'm going to take a position based on that. That is a waste of time because so often it just doesn't matter. Okay, the fundamentals, whatever. It just, at the end of the day, it's about trading, and trading is about charts and patterns and looking at what's going on in the market. So that's where you want to put your focus. Okay, I use the news to let me know when a specific market is going to move. and then go, okay, can I take advantage of that? Well, if I was just trading outright futures and forex, no, I would just either tighten my stops or stay out of the way, or or just trade the charts, but with definitely tight stops. But with Nadex, I can actually use that to make a trading plan specific for the news, where I can go in and I can get out of it, and on like a 1-to-1 risk-reward ratio. So as you can see, the euro dollar flies down, boom, hits the deviation. If I am directional, or if I'm trying to ride this thing as far as I can, I definitely would want to tighten my stop right here. This is the bar that closes below it, okay? And I look to see if another bar closes above it without breaking that high. It doesn't. So this bar right here becomes my stop. I get stopped out on that bar right there, take a nice profit on the trade. Or I did the 1-to-1, and you also would have taken a profit on the trade. And that was the German flash manufacturing PMI. And if you'll start logging these and keeping notes, then as these come up again, you'll know, hey, you know what, that worked really well. The French one didn't move that much. The German one did. So as you're starting to make your trading plan, it only takes 3 months. And I know that sounds like a long time, but 3 months is like a decade of trading plans. All right. So you literally start taking it, because most of these reports happen either weekly or monthly or quarterly. So almost every single report happens on that cycle. I mean, there are some exceptions, but over the course of 3 months, you'll have all the reports built up. And then you can start logging what happened, what was different. Was there anything I should have noticed about today that would have given me a heads up? Things like that. But you just want to start building that whole plan up. And as you can see, anyways, flies on down, boom, hits the 0.7, perfect. Comes on back, actually goes back up to the settlement price, and started moving on back down. And so, just sort of really a choppy day overall, but a great news trade early this morning. If we go on in, we also had some other trades. Now, also the Eurogroup meetings, they've been happening all day today. So that's part of what's causing the volatility, is just different little things get leaked out from that. And you had the flash manufacturing and the flash services PMI for the euro come out at 5 a.m. However, those, came in, and they came in also negative. But despite coming in negative, despite the fundamentals saying this is bad, you still see the euro going up and back down and back up and back down. So really doesn't matter what the fundamentals said. What really matters is go in, don't pick a direction, buy above, sell below, take profit. I have an archive, I believe, from last Wednesday, from the 13th. And so if you don't know what I'm talking about on how to trade these, definitely go back and watch the archive from the 13th. It's on channel 7 over there on TFNN. And just go down to the March 13th one, and you can actually see exactly what I'm talking about when I lay out how to trade the news on these trades. And then you want to use the spread scanner to help you find the trades. And let's look at a few other ones, and I'll bring up some examples to sort of show you what I'm talking about. But also, let's look at pound dollar. That was one of the other ones that we were looking at for today. So we got the pound dollar right here, pulling that out up. It came out a little bit later, and that report came out at 5:30. And as you can see, we go over here. It's pretty easy to see on the chart when the report comes out, because all of a sudden you start seeing these big bar moves. But right there, 520, there we go. Boom, pops up, hits 0.5, hits 0.7, doesn't even stop to look back, goes up, breaks above 1. Excellent move. Right there to the deviation. Doesn't quite go to 1.5 deviations. Hadn't got to tighten our stop yet if we were directional. Finally, we were able to tighten the stop right over here. And so, as you can see, this is the bar that closed above it. So when it goes below this price, we'd be looking for that. Now, one of the rules I always point out on these deviations, market comes on back down, closes below it if a subsequent bar closes higher. So we want to look and get right down into the tick, 51.87, and then we got to close at 51.87. Did not close higher. What about the next bar? 51.87. So we did not get a chance to move it back up. If this bar would have closed one tick higher, we would have tightened the stop a little bit more. But what this tells us, when this stop finally gets violated, we should expect the market to go ahead and reverse and go the other direction or go choppy. And so, if you're doing a reversal, I like to see that happen before I take a reversal trade. Okay? And so that's a big thing I want to use on a reversal as a confirmation on a reversal, is that on the 10-minute bars, even if I'm trading, and I don't trade 10-minute bars, I use 10-minute bars for trailing stops and to confirm a reversal. Okay? But I like to see that happen before I decide to go the other direction, especially after a big move. Otherwise, I'll be buying too soon, and then it keeps going, and I'm missing out. Plus, if I was long, I wouldn't be taking a reversal, right? So if the market's shooting up, and I wish I was long, I hope I was long. If I wasn't long, who cares? I need to act like I was long and go, hey, I'd still be long on the trade, so therefore I shouldn't be selling yet. And then all of a sudden, boom, goes down, hits the stop, and closes below the stop. Now, if I want to go into reversal, yeah, it's a little bit later, but I'd rather be a little bit late than way too early. And then all of a sudden it takes off. So this helps you sort of time a little bit better as well. So there's a lot of applications to it. Let's go in. Let's look at a couple other things. We also have the Spanish 10-year bond auctions. They came out on the euro dollar. We'll look at that. And not necessarily a news trade that I like to trade, all in and of itself, because we have this report right here. But right here about 5:45, those came out. We got some choppiness on it, and that's one of the reasons I usually don't call out the bond auctions. I just more want to be aware that they're happening. And if we go on over and look, let's see here. That knocks that trade out of the way. We're going in. We got a Bank of Japan. Their governor came out and decided to have a little speech early this morning, so let's look at that one. Right over here on the yen. And again, just being aware, not necessarily trading it, just being aware that he's talking, okay? So 6 a.m., and right there at 6, you can see that, there definitely was very little movement off of his direct impact of what he was saying. Maybe been a little bit more over here, but that's probably more, related to other news and things like that, but not really a tradable event, hence why I don't trade the USD yen, just because one of the governors of a bank speaks. And every once in a while I will look to maybe do a fade on Bernanke or buy on Bernanke or something, but that's about it. And we can look and see right here. Now, we did have some trades this morning at 8:30 a.m. And the trades I was looking at for that would have been gold, would have been U.S. Canadian, and would have been USD yen. And so when did that happen? Again, 8:30 a.m. So we scroll on over here to 8:30, and we get very, very little movement. And if you're on a news trade, if you're doing a short term, you would have had a hard time on the USD yen on that trade. Probably would have lost on one side or the other. Maybe at best broke even, but probably lost on one side or the other on that trade for the USD yen. USD yen did finally decide to move down, so if you did have an end of day, like at 3 o'clock, then you have a trade right now that's starting to look pretty sweet. So, and maybe within a comfortable take profit zone pretty soon if you had a later one. So pretty small impact movement from this morning's unemployment claims on the USD yen. Now, what about the USD CAD? Because we had, Canadian reports come out as well. We had the core retail sales. That was a sweet trade. So you're right here. We come down at 8:30. I mean, we're sitting. I mean, you can't ask for it to be any prettier than that. We're literally just sitting like right over here at aviation level. News comes out, you get a little pop, boom, and then flies up. And you have an excellent trade. You definitely bring in the 1-to-1 on that U.S. Canadian trade. It's a very, very, very good trade that you could have taken advantage of. And so I love it. The U.S. CAD has been really, really good to me lately. And you'll notice, like, out of Aussie's been sort of, it's doing great, and then it's been sort of hit and miss. USD CAD has been just moving like crazy. Been going great. USD Yen's been doing pretty good overall as well. And then let's go on over here. We'll check out gold. So we got the gold contract. Pull that one on up. And on gold, look at that. 8:30. Bam! So, I mean, just flies straight up. And gold right now, Bernanke tied it to QE by tying it to unemployment. So, gold's priced in dollars. Dollars affected by QE. It's a great, great trade. I love trading gold on unemployment claims right now. So it's a nice little gift from Bernanke. We take advantage of that one. All right, stay there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. Like I said, right there, we had a great gold trade. And, the thing I'm showing you on here is the news trade. So we'll go through. Let's look at a couple other ones that we have. You can also look at the USD yen a little bit later at the 10 a.m. report. So we'll go back in and we'll look at that one. We did start to see a move. So let's check it out, see how it's doing right here. And so the 10 o'clock report right here. Didn't get a massive move off of it, but we did finally actually get a decent little move down. And moved on down to 94.92, which is about a 30-pip move, which is usually about what you need to have a decent trade. So depending upon how much further it'll go, went down to one deviation, and you're always looking for a good lineup of all those. So that basically lines up the news trades for the day. And we don't really have anything going on tonight. I'll look at tomorrow, give you a setup for that. Tomorrow, really the only thing we have is the German IFO business climate. It's euro-dollar at 5 a.m., and I would trade very light on that one. I don't know if I'd call it necessarily the biggest market mover in the world, but it can definitely cause some movements on the euro-dollar. And let me look at it right now. I just want to see if there's even maybe a better trade on any other euro combo pair with it. But you may get a little bit more movement out of euro-yen. So euro-yen would be a possibility on that trade. But euro-dollar has also performed basically almost equally as well. But like one time euro-dollar was better, one time euro-yen was better, and all the other times they were the exact same. And they do hit like the 0.7 to 1 range there, which is what we're looking for. And I've noticed over and over and over again that works. So, the one trade you have tomorrow morning, 5 a.m., Euro, dollar, German IFO, business climate change. And what is that report? Well, basically, it's a simple report. It's a leading indicator of the economic health, and the markets like to react quickly to it. It's a survey of 7,000 businesses and what they think about their business conditions are currently and what they think is going to happen over the next 6 months. So as you can see, it's a very forecasting indicator. And it's not just, 100 or 1,000. I mean, it's 7,000 different business owners and what they think about now and the future. So, anyways, that report's, they're expecting it to come in at 107.8. That would actually be an increase. It has been ticking up over and over and over again over the last 6 months. But based on what's just happened recently with Cyprus and everything else, we may see it take a slide back. I don't know if they'll actually be able to include that number in this or not. I don't know how current the review is. So it may not actually include what just happened over this past weekend. We might not see that until the April indicator when it comes out. But right now, they're expecting 107.8. It came in at 107.4 last time, and they've beat the expectations every month for the last 5 months. So it's been a positive thing for the euro. But just be aware of it. It's 5 o'clock, and don't use it necessarily to trade directionally. Just trade news with it, okay? And that keeps it a little simpler for you because you're not trying to pick the direction. And really, you're not looking to trade it for a long time. That's the whole point of trading the news, is to get in, take a trade, have a 1-to-1 risk-reward ratio, get out, take profit. All right, so now let's check out some of our indices real quick. Go across the board, and we'll look what we got going on. And I'm trying to see. Yeah, there's not going to be that much happening on Monday either, Sunday or Monday. So that pretty much wraps up the news for us. And let's see here. Let me pull up this piece right here. And I want to adjust one thing for you so it's not distracting. And we'll get that up on the screen. And right now we are seeing the S&P starting to pull back along with the other indices after they filled their gap this morning. So let's look at, there was a gap, and what was that gap? Well, on any charting platform, you ought to have some sort of setting where you can turn off the extended trading hours. So I can go in here and I can choose CME, and then I go down to U.S. Index Futures, and then I can do extended or regular. So if I go to regular trading hours, I can then see the gap on the trade. So I can see this gap right here. The market closed at 4:15. It opened down here at 9:30. And the gap trade means you're basically trading to fill the gap. And, you go in, and it got within 1 point. It pulled back finally. And this was a pretty late gap fill. Usually it doesn't take this long to fill. Finally, it did go back and fill it on back in. It bounced right off of that. By the way, that happens a lot on gap fill trades. You'll see the market hit it and bounce off. I wouldn't say you just want to flat out go reverse, but just be aware that if you are doing gap fills often, you want to get out the second it hits it. Moves on down, back down right now to a negative 5 deviation. That's where it oscillated for about an hour and a half. And so if it can break this level, we may be able to get a move down lower to 0.7, possibly 1 deviation level. And so we'd be tightening our stop again on this bar right here if it does close below the deviation level. So we'll see what happens here in the next couple minutes. But right now it looks like we are going to close below that, which would put us at a high of 1544.25. So a stop at about 1556 on a short side on the S&P right now, a trailing stop. All right, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Checking things out, looking at it all. Got the market moving down right now, starting to push on that 0.7 deviation level. So going right to it. Obviously, we have our stop focus right up here. This bar right here, if it closes on below the deviation, then we'll know what we're doing next on that one. And so right here. And so we've moved our stop down even further at this point to just right above this level. And if this one closes, we'll move it down again to right above it. And then right now we're looking at targeting down at the 1537.25 is the next deviation level we're expected to oscillate. So we'll probably stick around here for a minute because every time it hits a deviation, not every time, but we often see it oscillate for a while before it finally decides to move down. And this is also where your nerves start getting racked because, you're short. You're like, should I get out now? Should I take my profit? And all that stuff. And basically this is the point where you should expect it to oscillate back and forth. Okay? So let you know that helps you have a little more patience. And looking on over, we'll check out the Dow. So on the Dow right here, we can see it's moved on down. It's at its 0.7 as well. And so this one we would have tightened the stop right here. So when this bar closes, all right, so here in the next 5 minutes or so long as it doesn't just fly up in reverse, we're going to tighten the stop right above that bar on the 10-minute bar using the 10-minute deviations. And you can see it, it's coming down, almost hit 0.7 earlier, bounced back up, filled the gap, came on back down. We can roll it around and we can check out some of the other indices. We'll go over here to the Russell. It filled the gap with no hesitation whatsoever this morning. Flew straight up and hit it. Coming on back down, working on the 0.5 deviation still. So sort of usually it's a leading indicator. It was definitely on that gap fill. It was way ahead of the curve, and it started moving on down. But, it's not moving down near as fast. So it sort of led the pack out of the gate, and we'll see what's next. All right, so that covers the Russell and the Dow. Let's go ahead and look over at the NASDAQ. And on the NASDAQ, we can see the NASDAQ decided this morning it was not going to fill the gap. Came on up, did not fill the gap at all right there, if you look at that. So went on up and from the settlement price, and we are looking at settlement. And again, settlement is where they take the orders from the last 30 seconds in trading, the CME. So all the orders that came in the last 30 seconds, they multiply the filled orders by the volume filled at that price. And so they get a total number. It's basically a volume weighted price. Okay, so if there's 100 contracts times the price. And then they take all those prices and their total times volume, they sum it together and they divide it by the total number of volume traded in that 30 seconds. That's where settlement comes from. And that's why often settlement will be different than what's on your chart. And so it went up, and you got this just quadruple top basically going on. Just talk about a major resistance level this morning for the NASDAQ. And then it finally came on down 0.5, 0.7. And so that stop, obviously, on the way down now is right there. And if it moves down again, we'll move it down again if it closes below this level. And now let's go ahead and check out some of our other markets. We'll go in and look at the corn market right here. And corn has been pretty interesting. It's even doing some gap fills on its own. And came on down and took its time, but went on back up completely, filled the gap. And again, using that same method for potential reversal, it's even something I was looking at this morning, is when you're at a deviation level and you get that close below, and you're looking for potential gap trade, it really can be, that's something I'm looking at more and more, but can be a really good indicator to go ahead and play the gap fill if, after that bar closes below, you got that stop right there, if that high gets violated, okay? So it goes up. So if you were, let's just say you were short, like leading in, you were trading the early morning session, and you were short, and this would be your stop out on, going short. Well, if you're seeing a gap fill, that's probably one of the best times you could take it, because now the momentum is going back in your favor, but you're going to have this half deviation. A lot of times you don't always have that half deviation when it does take place. So what we're looking at is that move on up, and we just basically want to take advantage of the moves and how we put them all together. But they are very, very helpful, and we're working on right now a pretty exciting project. We're hoping in the next 60 to 90 days to have these available for 40 futures markets and for 3,000 stocks, ETFs, and indices as well. So that way you can get access to them and use them on whatever it is that you're trading, and basically any optionable market. And the reason we need it to be an optionable index or ETF or future or whatever is because we pull the implied volatility to make the levels. They're not pivot levels. They're not historical deviations. They're not ATRs. They're not floor pivots, things like that. We're actually using implied volatility. We're using a bell curve deviation formula for 1 day for an intraday. So for intraday trading, and we're pulling the implied volatility out of the underlying options market to develop that actual number. And so it's the market's expectations on how far the market will move. And that's why over and over and over again, we'll see it come down, and this is market expectations before it reverses. And I don't just say reverse off a deviation. I want to make sure that it, like I said, violates that high on the 10-minute bar. But once it does, there you go. And where's your target? The next deviation level, the settlement price. In this case, a gap fill on corn. So same thing would have worked pretty well on the indices as well this morning. Now, if we go over and look at oil, then on oil right here, what we can see is it's where it settled out yesterday, gapped on down. Oil did not have the gap fill, and so it's down right now. It's actually really moving down. So it went up, violated that level right there, finally did turn around. So if you were long, and you can take this, literally you can just follow this the entire way. But right there, let's say if you were long at this level, then it violated it right here. So now you go short on this bar right here. So you can say right about here we're going short. When it breaks it, it comes on down. And then this bar goes below, so we're moving the stop down. We have another stop. So we're going to tighten it right there. And then this bar breaks below that. And so you could tighten the stop again right here. That's a pretty massive move, by the way, on oil. So you might even be wanting to take, depending on if you're, layered into contracts, you might want to take some off, or maybe you're just really looking to get the big move. Maybe oil will drop a lot more. And if it does, right now we're going for 1.5 deviations. That's the next point where we're going to tighten our stop. But we can use that to tighten our stops all the way down right there on oil. Basically give our, controls our risk, but also gives it room to run. So you got to let those profits run some. And does that mean you give some up? Yes. You're going to give up profits when you give profits room to run. You're never going to buy, you're never going to get out at the top of the bottom. I mean, you may, but it's going to be luck. It's not going to be something you're trying to do on a consistent basis. What you're trying to do is get as much of that run as you can, and without giving it back and without getting out too soon. And so that's the whole idea on this. That's how this works. The whole point is I want to let my profits run. I want to give them some room. Sometimes that means I'm going to give up more than I want to when it finally does decide to turn around. But overall, I'm still locking in profits, and more often than not, I'll actually end up staying in longer than I would have if I would have had a tighter stop. So in the long run, it should actually help you take in more. Just every once in a while, if you get a pop like this on a 10-minute bar, that's pretty hard to overcome. And but anyways, let's go ahead and check out a couple other markets while we're on it. Let's go ahead and check out the gold market. Over here, we got gold. It's up 1.5 deviations, and it literally just closed above, and the pit just closed as well. So it closed pretty much on its high right there, and right there. So, you would have been in just oscillating most of the morning. And we can go over and check out the silver markets. Pull silver up, and it was up already all night. So if we go back and turn off the gaps here, so we go back and look at, basically just a 24/7 approach, extended trading hours, whatever. Then what we'll be able to see is, it shot up right there off the news. Just, that was the gold trade, silver trade, either one. I like gold better on Nadex. It ticks a lot tighter. And so if I'm trading the metals, out of the 3 metals available on Nadex, you have gold, copper, and silver. I stick to gold. And the main reason is just, again, how it ticks. So gold ticks in 0.1. Gold on Nadex ticks in 0.1. The ticks don't exactly match. They're bigger on copper and silver, so in my opinion, they're not as good. And that's fine. You know what? I also don't trade. I saw a conversation in the den about milk. I don't trade milk. I don't trade orange juice. There's a lot of things I don't trade that are out there. I may go buy it at the grocery store, but I ain't going to trade it on the futures market. And and I love silver. I'll collect silver, whatever. But I'm not going to trade silver on Nadex. So every exchange has their stronger contracts, has their more liquid contracts, has contracts that have features you like or don't like about them. Find the ones that you like. Find the ones that give you the best edge in the way that you trade. And that's where you want to put your focus. And so silver would be one of those ones that, hey, it's a cool contract. It's probably not my favorite one to trade over on the Nadex exchange, but I do love gold. And silver binaries you could trade okay. But the silver spreads, like I said, I just don't like how they tick. But and then NASDAQ also. And I think that's just an important point because you'll figure it out sooner or later, or you won't figure it out and you'll think you're just a bad trader. But the NASDAQ, silver, and copper, if you avoid those 3 spreads and you focus on all the other spreads, you ought to be pretty happy. So I'm not saying that that's all going to work out for you. I'm just saying you're going to have a hard time with those 3. But the other ones tick the same or better. Like corn ticks 0.1, soybeans ticks 0.1, but it's a little lower, liquidity, just like the CME's lower liquidity. However, something like the S&P 500 futures, extremely high liquidity. The S&P on Nadex, extremely high liquidity, and the S&P on Nadex ticks at 0.1, which is even tighter than the S&P 500 E-mini futures, which tick at 0.25. So it's pretty sweet. I love trading that one on there. The Russell ticks 0.1, just like the Russell. The Dow's ticking in whole numbers, just like the actual YM contract. And all the FX pairs are ticking in pips. So those work well. And let's see what else you got. You got oil, it's ticking in pennies. And you also have natural gas. That one's fine as well. So it's got 3 decimal places out. So you just want to find ones that have similar ticks. So that way, you're minimizing your bid-ask spread, minimizing any room to break even that you got to make, and that you're mirroring the underlying market as much as possible. Because I always want to, make sure, obviously, I have the best deal. So I'm trying to lower my risk, and I'm trying to make sure I have great trades on at the same time. And so when I'm going in here and I'm looking at these different spreads, one of the questions I'll get a lot of times is, well, I want to scalp or I want to do this. And there's, how can I trade Nadex to make it more like the underlying market so I don't have all this complicated spread stuff to deal with, but I still get the benefit of defined risk? Well, the way that you do that, let me show you right over here, is we'll go in, let's say you want to trade the S&P, okay? So you wanted to say go short the S&P when it bounced off of the deviation level, or whatever. Maybe you want to go long right now, or maybe you want to add in and you want to go, keep adding in short. then you can go over to the spreads, and it gets sort of confusing. Okay, so you go over here, and you're looking at all these spreads, and all of a sudden, look at there's 3, 6. Let's see if I probably got to refresh, because you have to remember to refresh. If you're using the scanner, it refreshes for you. But if we go back in, we go in the S&P 500. So there's 3, 6, 9. There's 10 different spreads currently trading that I'd have to filter through. So I got to open all of them up and click on each ticket, and that obviously can take a long time. Well, if you go over here and you check out the Diagnostic Box Spread Analyzer, just click on that, get a 2-week free trial, and see how it works. And what you'll notice is it gets a whole lot easier than that. So let me show you. I'll log in real quick, and I'll show you exactly how that works. And you can access it, and you can say, okay, how can I do this to do different kinds of trades? So we talk about straddles, we talk about strangles, we talk about a lot of different things like that. But what I want you to learn how to do is, whatever strategy works for you. You don't have to change how you trade. You could do the news trades like I do. You could do the ultimate hedge strategy where you're hedging your futures and hedging your forex trades. You can do the low risk, spreads. But you can also use it as a way to put up less margin, have less risk, not worry about, your stop, basically your risk increasing. And so let me show you that method. It's actually one of the simpler methods to learn over on Nadex. And if you go in, and once you log in right here, you'll just click on the box spread scanner. And of course, you'll see the deviations. Those get updated every day, right around 7:15 Eastern at the latest, like 11 o'clock. But we try to get them up there by 7:15. And then you go over to spread scanner. And now you see, here's all the Nadex spreads for just US 500. Okay, and we have every market covered. And I can say, you know what, let's just say I want to buy. I think it's going to bounce off this level or, whatever. Okay? And I'm just giving an example. I'm not placing a trade. Just so if anybody's listening and mirroring, they know that. And so really what I'm going to be looking for now is I want trades that are really close to break even. So you see how that's 0.2, 8.5, 3.5. So I like that 0.5. That one's close. 0.1, that's really close. I mean, that's less than a full S&P E-mini tick. I can go down here, 0.3, 0.1, 0.1, 0.1. So all these spreads are trading at the exact same price as the S&P 500 E-minis. Okay? So now I got to look at them and go, well, which one would I want to trade? Well, this one expires at 4:15, but I have to put up $324 to place the trade. I mean, that's actually my risk on the trade. Now, I can get out. I don't have to hold it and take a total loss. It would have to fall all the way down to 15.10 for me to take that much of a loss. Probably not going to happen today. But do I need to do it? Well, no, because there's other trades that have that break even and that have that same expiration time. So I can get rid of that one, get it out of the way. Now I have one that's $124, risk $274. That's better. $221 and $75. That's worse, and it expires at 4:15. So let's get rid of that one. Now this one is a $73 risk, $221 reward. And it expires at 4:15. So less risk, and the reward is not that's maximum reward. If it actually went all the way up to 1565, I don't really have any plan for the market going all the way up to 1565 today. So which means I don't really care if it goes up to 1570 either. So why take on the additional $50 risk if I don't think there's that additional potential profit in there, like realistic profit, target profit? So I can get rid of that one. And then go up here and then go, okay, well, this one's $70 risk for a $27 reward. Don't really like that one. This one's a $23 risk, so it's my lowest risk trade, $75. It expires at 2 o'clock. So I only have 20 minutes on that trade. That might be okay if you're expecting a movement now, but maybe you want to have a little more time. So you could do this trade. If you put it on, it'd be $100 risk, and that'd be your max risk on the trade. This one right here, if you did 5 of them, by the way, it'd be $100. And down here, it'd be about $350. Well, what's your margin? It's easily $400 or $500 on the S&P. So less margin, defined risk. We'll talk a little bit more about this when we come back and wrap up. And talk to you in just a couple minutes. Bye.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so what we're going to just like looking at, spreads to potentially mirror the market. And so there's a lot of different choices you could choose. We're looking for the lowest risk spread that is closest possible to where the market's currently trading at. And we found those two spreads, 0.4, 0.6 away. So you're talking like half a tick, half a point. And, that's going to vary and fluctuate with bid ask and everything else, even on the underlying market. So, like right now, if you're actually buying it, if you're selling it 1541.5, well, that's right at where the market's at. It's at 1541.5. So there's actually no distance to break even on the short side in that sense. I mean, yeah, the bid ask spread you got to cover. So that's really all that's left in that break even distance is your bid and ask spread on that trade. So, which is pretty cool. But you can use this. So if you did $72 and, I bet that should be $70 or, maybe a little less than that after you take out the fees because we add the fees in, it would be, $350. Well, if the margin's $400 or $500 easily on a day trade, Okay, could it even be as high as say 1,700, depending on what time of day you're trading, or just what broker you're using, and can go higher, of course, at certain times a day. Some brokers charge full, $4,000 if it's before the cash market hours. So depending on broker and time of day, it could be higher. Nadex, it's not ever going to be that's it, $70. And once you're in, your margin never fluctuates. So let's say a major volatility movement happens, like a flash crash, and they increase margin all of a sudden. I mean, that can knock you out of a trade, potentially. So with this, you don't ever have to worry about that. Margin will never increase. It will never go up. Risk will never increase. And so, yeah, if you did 5 of them, that'd be, say, $350 of risk. But you don't have to take all 350. And it's sort of weird. And I know so often we talk about, your trade is your stop. You don't have to get out. You have time to be right. And that, in my opinion, is the best way to use Nadex. But for those who are just like, hey, you know what? I still want to trade the futures, but I would like to use less money in my account. I would like to have defined risk so I don't have to worry about some weird 4-point move in oil in 2 seconds and wiping my account out. I mean, I've seen we've all seen if you trade for any time, gold, oil, things like that just flying. And it didn't matter where your stop was, it got jumped, and you got major slippage because something happened and it just flew. And sometimes it's out of nowhere. So with this, it caps your risk. You don't have to ever worry about that. Now, $300 risk means $350 risk. That means my max risk. If I held it all day and it literally went, closed below 1535. That's when I would lose that much, okay? If it closes where it's at now, I'm going to basically get all my money back. If it closes a little bit lower, I'll lose a little. If it closes a little bit higher, I'll make some. If it closes a lot higher, I'll make even more. And I can close it out at any time I want to. If it goes down $100 and I want to risk more than $100, then you know what? I could close the trade out if it goes down $100. I don't have to take on the $300 risk. So I can use it just like I'm trading futures. I can get in, I can get out, I can even take stop losses if I want to. Or if I can find a spread that gives me an even better opportunity where I don't have to worry about a stop loss, then I can do that as well. So it's not like there's just one right way to trade Nadex. I would say if you're new to trading, you need to stick with the ones that are close to the floor and the ceiling. If you've been a trader for a long time and you just want to see, hey, can I lower my margin? Can I lower my risk? Can I ensure that I can't move my stop? Okay, because those mental stops that we have a tendency to use. And we have a stop here, but, oh, man, look at that support level and look at the DOM and look at the indicator. And, man, that divergence is up on the RSI. And if I move it down 4 more ticks, I'll be okay. And it takes a little time. Oh, it's 3 ticks. It's only 1 tick away. Wow, I'm still seeing the same thing. And I move it 3 more ticks. Bad day. And, yeah, should you do that? No. Do people do it? Yes, all the time. So, you need to have good risk management no matter what you're trading. The nice thing is this forces you to have good risk management. No matter what, you can't lose more than 350, okay? And that's if you're doing 5. You could also, by the way, just do 1, okay? But I hope you picked up a few new things today, some ideas. Get in there, check it out. Sign up for the Spread Analyzer. We're going to be having another conference real soon up in the Northeast, and I look forward to seeing you there. I'll see you tomorrow on the show. Stay tuned. We have another great one coming up for you.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.